Okay, everybody, here we go. It's me, Gregory Mannarino. It is Sunday, December 18, 2022, and this is my newest segment of Markets A Look Ahead. And I want to do that with all of you. I want to put this into perspective, what we're seeing here. We need to evaluate risk in this market and where things appear to be going with regard to that risk here. And with the economy, what we're seeing here, the fable, and I mean fable, that is being sold yet again to the people of the world. It's laughable to me. But before we look ahead, let's look back just a moment. So last week, this market, a lot of volatility here. But if you are like me, and I hope you are, focusing on the number one main driver of this market, there's nothing going on here. As a matter of fact, risk is dropping, and we can gauge that, people, by looking at one thing, the MMRI, Mannarino Market Risk Indicator, link in the description of this video. We have come down substantially as of late, and not just that, risk in this market not only appears to be dropping, but it's stabilizing along with global bond yields. There's no gyrations here. We've been there. If you recall, a couple of months ago, we had gyrations here in the global debt market that were, well, absolutely concerning. Now, what do we know? What do we know is going on here? Let's back up a little bit with regard to that. All those gyrations that we were seeing in the debt market clearly is a sign of instability. What do we know about the debt market? What do we know about the global financial system in aggregate? Well, first of all, that in itself is a fable. It's fantasy land. It doesn't exist. It's not on the elemental chart. It's based on nothing. Okay, there's no hard asset backing the financial system. It's all just a kind of thing that exists only because people believe, or they're being told, that everything is going to be fine and things are just going to function. That's all. The hope that the system is just going to keep on going the way that it is. And the only way that it can continue to go on the way that it is to continually fuel it with more and more debt globally. It has to continually expand. Once this mechanism is pulled out, this whole system implodes. You know that. This is why we don't have a budget. We got to go, this Biden-Stein stopgap measure to fund the government here. How every world leader must find a way to continually pull cash into the now from the future, and central banks are more than willing to lend. That's the system. That's how it works. You all know that here. So looking here at the debt market, understanding that it's insolvent, it went through a period of a lot of instability here. And so what's going on? What are central banks doing right now in front of everyone in their freaking face to maintain the illusion of stability? You know what I'm going to tell you. They're buying it all. They can't stop buying it all. In order for any central bank people to keep bond yields at a certain level or rates at a certain level, they have to get into the market and make it happen. They can't just say it. They have to buy debt. They have to create cash magically out of thin air, and they got to buy the debt. That's it. There's no other mechanism here. It's very simple. But most people don't even have the slightest clue that's how it's done. Most people hear, let's say, I don't know, a Fed president say, hey, we're going to keep rates where they are. They just think it just happens just by some miracle. No, it doesn't work like that. So central banks collectively, who do obviously coordinate, are doing I hate to say it, but a pretty good job right now of keeping the illusion of stability in the debt market real for people. Although it's, again, the only way they can keep it going is to continually inflate. You understand? You know this better than anybody on the face of the earth. If you've been following this blog, that's how the system functions. It's a Ponzi scheme, and in the highest order. And you all know that I've been telling you this for like, I don't know, many, many, many years here. So looking back, understanding what we had a lot of volatility here in the stock market. Meanwhile, the debt market is remaining stable. 10-year yield not doing too much. We had some gyration here with regard to the relative strength of the dollar. You know how this works. It's always the same story. When you see, or when the market smells fear or gets afraid, you get that automatic, instant, knee-jerk reaction into the dollar, and you get that uptick in the relative strength of the dollar. It's always the same. It always plays out that way. So when you see, for example, if you're new to the market and you really want to understand how it works at its core, all right, when you see, for example, let's say the stock market fall 1,000 points, talking about the Dow Jones Industrial Average, you should look at two things automatically, three, all right? Number one, when you see a big drop in the market, what's the dollar doing? What's the relative strength of the dollar with Dixie doing? Like, are we getting a knee-jerk higher? Because if you see that along with the sell-off in the stock market, that tells you that it's a fear move. Okay, it's not based on anything real. Fear is not real. You understand? Fear is an illusion that's created in people's minds, and it's also a tool that is being used to control the minds of men and women since time immemorial by the powers that be. You know that. Okay, so that's number one. Market's dropping. What's the dollar doing? Number two, what's the 10-year yield doing? Generally, if there is an excessive amount of fear in the market, what do people tend to do? They tend to go out there and buy or invest in debt. I know how insane that sounds here, but that's really the truth. So you end up seeing when people put cash to work in the debt market, as cash goes into the debt market, bond yields tend to drop. Okay, so that's that fear trade that we always tend to see. I mean, these things, obviously there are other factors here, and there's a lot of other factors here. But this is a general rule of thumb. I'm explaining this to you. So just to put this into perspective, last week we got that knee-jerk higher into the dollar. Nothing dramatic here, but literally a rock-solid 10-year yield, which is the benchmark yield. Okay, it's where everyone looks. And this mechanism was reflected in the MMRI, which has been pretty damn stable, actually came down a little bit. So to me, like, look, you know how Greg Mannarino works. I don't fixate on the stock market. Because, look, the stock market goes up and the stock market goes down. That's just the way it is here. And the debt market being that it's the driver here. And the dollar, understanding, is also a unit of debt, along with the 10-year yield, the benchmark. We can gain a lot of information here. And we don't have to panic. What you and I are looking for eventually is an implosion in that debt market. And we're going to see it in real time by watching global bond yields, by looking at the 10-year yields, by watching where the MMRI is going here. At one point, as you all well aware of if you follow this blog, we're going to get a debt market implosion that is going to rock the core of the earth, a massive sell-off in the debt market. Yields are going to spike in an uncontrolled fashion. We witnessed this several months ago. We were watching bond yields rise. And what was going on? All of a sudden, some miracle buyer came out here and was buying huge amounts of debt. It can only be one entity. In this case, it's the Federal Reserve. But it's central banks collectively around the world who are in here buying it all. I've been telling you this. Central banks are buying it all since like time and freaking memorial. That's going to happen here. A spike in bond yields, an uncontrolled spike in bond yields is going to melt down global stock markets. And I mean melt down global stock markets beyond anyone's wildest dreams. Look, if you follow this blog, if you have even one fraction of a functioning brain cell, you realize that this market is in la-la land. I don't even know where la-la land is, but that's where the stock market is. No bearing on reality. We have a global economy contracting at its fastest pace ever in history, and it's not going to stop. With central banks right now in here raising rates, okay, not as aggressively as they were. We just got a 50 basis point out of the rate hike out of the Federal Reserve, Bank of England, Swiss National Bank, European Central Bank, all doing the same things at the same time, but they don't coordinate, okay? Anyway, but they're still raising rates in an environment where the economies continue to contract. And what did we just find out from Fed President Dolly? I think it was her. I reported on this on Friday. She's saying in order for inflation to actually come down, many people need to lose their jobs. I think we should start off with hers. Do we really need these freaks here dictating? Think about the power of central bankers. They dictate our lives. They really, really do. They control, if they control the monetary system, which they all do, these central banks collectively, this whole everything is based on the financial system, and they control it all. Unbelievable amount of power that they have. Anyway, it's a farce on such a scale that it's hard for me to get my head around it. So anyway, looking ahead here to next week, let's say, for example, let's just throw something out. Stocks fall under pressure tomorrow. What is Greg Mannarino going to do? And what should you do? Right like this. What is the 10-year yield doing? What is the relative strength of the dollar doing? Or better yet, the MMRI. It's going to tell you, right? It's, right there. Right now we're at 227, the MMRI. Again, link in the description of this video. If you see, for example, a big sell-off here tomorrow, I'm just throwing this out there. I'm not saying it's going to happen. Let's just hypothetically throw this out here. You see stocks fall, and you see the MMRI, 227, 237, 240. You know we got a problem. Risk is rising in this one. But if you see risk stable, look, that tells me that this route that we're seeing here in the market isn't going to last. It is not going to last in the short run. In the long run, I mean, we're going beyond the meltdown. I mean, beyond the meltdown. Look, it's so big. It's so tremendous here. When this thing happens, and again, do you think for a freaking nanosecond that all this is going to implode by accident? Oh, like transitory, like temporary? No, we're being pushed that way. The entire global population of this world is being pushed faster and harder into a moment of time that people are never going to forget throughout history. An implosion here in the current financial system, so a new one can be introduced. I've been telling you this since like time immemorial. You all know that, and I think those of you that have been with me understand where we're going. I mean, it's just the system right now is so toxic and actually so fragile because it's insolvent. But central banks are doing everything in their power right now to keep the illusion real, the illusion of some kind of stability. They are not done, and I've told you this a million times, trying to create new slaves to the current system. They need as many people as they possibly can to rely on the current system, the current central bank run system, okay, dependent on the government. The government is central banks. We all know that. Once that is achieved, when they have the vast majority of the global population dependent on their system, that's when they pull the plug. And these same people who are dependent on that system will be dependent on the new system. And that new system is going to benefit nobody here except for maybe the 1 and 2%ers. That's all. We're turning really honestly into a slave planet right now, where we have people that can't make ends meet. They're borrowing beyond their eyeballs. They continue to borrow beyond their eyeballs. What is it? 63% of American households living paycheck to paycheck, with over 90% of the population with zero net worth. In the negative, actually. They have a negative net worth. It's an incredible situation, honestly, but that's where we are. Also moving forward, we should be looking at commodities, people. I've been telling you this for the longest time. I sincerely believe, and it should make sense to you, an implosion in the debt market is going to melt down global stock markets, and cash is just going to move into real things. I've been telling you to bet against the debt, become your own central bank since time immemorial, holding hard assets, gold and silver. My favorite assets of all freaking time, silver. I still stand by this is the most undervalued asset ever. So, but you're going to see other things too. Energy, crude oil, which has fallen under some pressure lately. I think this is going to turn around. Not sure when, but just look for it. False flag, some other kind of thing like that. They're really determined to squash people, to pressure them from every angle possible, to force them to continue to borrow. That phenomenon that you and I spoke about from years ago. Prior members of the middle class here falling into that lower rung of society, becoming dependent, slave dependent on the system, on the current system. And that's really where they're pushing the world right now, central banks. It's an insane situation to see. Meanwhile, we're being told everything is great, it's fantastic, and we're strong, and President Bidenstein mummy man lying about inflation coming down. It is not coming down. But when you have the supposed leader of the free world, the man can't walk and chew gum at the same time. Obviously, he's being told what to say. Try to sell you that kind of a lie. Inflation is not coming down. It continues to rise, although at a slower pace. And what are central banks doing about it? Nothing. They're doing the same thing over and over again, telling you since day one that by raising rates, some miracle was going to happen, and that was going to, stop inflation. No, it's been a lie since day one. They want to stop inflation. You know what they can do? They can contract the money supply. Instantaneous relief. But no, you will not hear this out of the mouth of brain-dead presidents, politicians, bankers. No, this is the big secret that you're not allowed to know. All right, people, look, I covered a lot here for you in this video. I hope I have answered some of your questions. I do read the comments. And, I'll see all of you in the morning. I want you to enjoy the rest of your Sunday here. Go outside, get some fresh air. And, that's all. I'll see you all in the morning. Love you a lot. Please share the video.